This is very interesting because today I'm going to speak to you about solo 401k plan. I'm going to explain things to you in easy, everyday English. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I'm going to speak to you in plain English about 401k, but solo 401k plans. And what is it? A solo 401k plan, also known as an individual 401k, is a plan for small business owners. So by allowing you to contribute as both the employer and the employee, this plan enables you and your spouse, if he or she works for you, to boost your retirement savings with higher contribution limits in many cases. And this kind of plan, a solo 401k, is best suited for self-employed individuals and partnerships without full-time employees other than a spouse or business partner. And these plans can be called also a self-directed 401k, individual 401k, as I said, individual Roth 401k, self-employed 401k, personal 401k, or one participant 401k, depending upon the vendor offering the plan services. So all those terms are interchangeable. And the IRS allows one exception to the no employees rules on the solo 401k, your spouse, okay, as long as he or she earns income from your business. And that could effectively, if you really think about it, it could effectively double the amount you can contribute as a family, depending on your income. Your spouse would make elective deferrals as your employee up to the 19,500 employee contribution limits, plus the 50 and older catch-up provision if applicable. As the employer, you can then make the plan's profit sharing contribution for your spouse of up to 25% of compensation. And there are some important dates when it comes to a solo 401k. So in order to make a contribution for any tax year, you must establish your solo 401k plan by December 31st of the year and make your employee contribution election by the end of the calendar year. And you need to actually think about that. And unless your business is incorporated, you can make the contribution once you have calculated your net business income for the year, but no later than your tax filing deadline, including extensions. Very important. So employer profit sharing contributions can also be funded up until your tax return due date plus extensions. And let's talk about administering a solo 401k plan. So once your solo 401k plan exceeds $250,000 in assets at the end of the year, the IRS requires you to file an annual Form 5500 Easy. Or if you ever terminate the plan, you must also file a Form 5500 Easy. So we're showing you right now on the screen here a snapshot of the form, along with the link on the IRS website where you can see the Form 5500 Easy. So let's just now have a conversation about the key benefits of a solo 401k. The nice thing about a solo 401k is to get you to pick your tax advantage, if you really think about it, because you can opt for the traditional 401k, under which contributions reduce your income in the year they're made. In that case, distributions in retirement will be taxed as ordinary income. So that's one option. The other option is that the Roth Solo 401k, which offers no initial tax break but allows you to take distributions in retirement tax-free. So in general, a Roth is a better option if you expect your income to be higher during retirement. So if you think your income will go down in retirement, you want to opt for the tax break today with a traditional 401k. And this is just a matter of personal financial planning. And because of this tax perks, the IRS has pretty strict rules about when you can tap the money you put into either type of account. So with a few exceptions, you will pay taxes and penalties on any distributions before age 59 and a half. And you can actually contribute as both employer and employee. And this scheme offers tax-deductible contributions as the employer and pre-tax elective deferral contributions as the employee, along with tax-deferred growth potential on contributions. And elective deferrals can also be made as Roth contributions with those earnings tax-free in retirement. So it really depends on what works for you. And the cool thing here is with the solo 401k plan is that you can choose to allow plan loans. It's not as complex as you might think. And your broker can provide a plain document and will take care of the required distribution filings for you. You'll need to file, as I said earlier, the Form 55 Easy with the IRS once your plan assets reach $250,000. And in addition, there generally are no setup or account maintenance fees, commissions, service fees, and exception fees still apply. And one of the advantages of solo 401k plan is that you can choose to allow a plan loan. I mean, if you really think about it, life happens, stuff happens. You never know. You might have some financial difficulty down the road. You want to be able to tap into your own 401k, right? So you must actually, so with a plan loan, your investments are liquidated to send you a loan check. So this may limit your ability to meet your retirement goals. You must also pay your loan back regularly, at least quarterly. You must assess interest on your plan loan and pay that back into your account with each loan repayment too. If you don't follow the plan loan rules with your loan, if you don't kind of like comply with the rules, your loan will be taxable to you, and a 10% penalty will apply if you are under age 59 and a half. So those are the official IRS rules. And the maximum loan you can take from your solo 401k account is $50,000 or 1/2 of your account balance, whichever is less. And let's just talk about the solo 401k contribution limits, because there are limits as any regular 401k. So a business owner may make contributions to a solo 401k as both an employee and employer, right? I already clarified that. So you want to contact your accountant or tax advisor to learn more about what makes sense for your business and circumstances. Very important. The total solo 401k contribution limit is up to $57,000 in 2020 and $58,000 in 2021. Now, those limits change all the time, but they are usually around 57, 58, 59. They go up a little bit. But yeah, so for 2020 and 2021, those are the limits. And there is a catch-up contribution of an extra $6,500 for those 50 or older. So to understand solo 401k contribution rules, you want to think of yourself as two people, right? So you have on one end, you have an employer. So you are the employer of yourself. And on the other hand, an employee, yes, also of yourself. So within that overall 57,000 contribution limit in 2020, for example, your contributions are subject to additional limits in each role. So as the employee, you can actually contribute up to $19,500 in 2020 and 2021, or 100% of the compensation, whichever is less. So those 50 or older get to contribute an additional $6,500 here. So this is actually the catch-up contribution I was referring to earlier. As the employer, you can make an additional profit sharing contribution of up to 25% of your compensation of net self-employment income, which is your net profit less half your self-employment tax and the plan contributions you made for yourself. Okay, so the limit on compensation that can be used to factor your contribution is $285,000 in 2020 and $290,000 in 2021. Keep in mind that the thing here is that if you're a side gig, and if you have a side gig, if you have a side hustle, employee 401k limits apply by person instead of by plan. Okay, that means that if you are also participating in a 401k at your day job, the limit applies to contributions across all plans, not each individual plan. So unlike traditional 401k plans, there are no compliance testing requirements to ensure solo 401k plans do not favor highly compensated employees and are non-discriminatory as long as you have no employees participating in the plan. And one thing I also want to say before moving on here is that compensation from your business can be a bit tricky if you really think about it, right? This is calculated as your business. So compensation from your business is calculated as your business net profit, right, minus half of your self-employment tax and the employer plan contributions you made for yourself. and other business owners and any participating spouses who are also in your solo 401k plan. And the limit on compensation that can be factored into your tax year contribution is, as I said earlier, 285 grand for 2020 and 290 grand for 2021. I just wanted to repeat that because this is very, very important. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Studio Kiwi Show. We are actually having a conversation here about solo 401k plan, and I'm explaining things to you in easy, everyday English. I want to talk to you now about the distribution guidelines, and this is an important element to know. Distributions from a solo 401k may be subject to a tax and a 10% early withdrawal penalty if you made those distributions under age 59 and a half. But there are exceptions. Some exceptions may apply. Minimum required distributions start at age 72 unless you turn 70 and a half prior to January 1st, 2020. Then you must start taking your RMD, your required minimum distributions, at age 70 and a half. And let me just give you more info about solo 401k withdrawals and details. So as with all retirement plans, there are rules to when you can and must start taking withdrawals from your solo 401k plan. And the thing here is that if you don't follow those procedures, as I said earlier, in terms of 70 and a half or 59 and a half, there is a 10% early withdrawal penalty for distributions that you take before age 59 and a half. How do you set up a solo 401k plan? It's kind of cool to know the contribution limits, the distribution limits, but how do you set it up? You can open a solo 401k plan at most online brokers, though you will need to have an EIN, an employer identification number. Okay, so the broker will provide a plan adoption agreement for you to complete, as well as an account application. So once you've done that, you can set up your contributions. You'll have access to many of the investments offered by your broker, including mutual funds, index funds, ETFs, exchange traded funds, individual stocks, and bonds. If you want to make a contribution, let's say for this year, you must establish the plan by December 31st and make your employee contribution by the end of the calendar year. You can typically make employer profit sharing contributions until your tax filing deadline for the tax year. All right, this is kind of important to clarify here. Note that once the plan begins rocking, you may require some additional paperwork because the IRS requires an annual report on Form 55SF if your 401k plan has at least $250,000 or more in assets at the end of a given year. And if you need help managing the funds in your solo 401k, robo-advisors or online financial advisors will manage your 401k at your existing provider. All right. So what I'm trying to say here is that you have a series of providers who can help you either through algorithms or with humans. All right. And the one thing I want to say here also is that a traditional 401k is actually offered by a company allowing employees to save for retirement by contributing to their own account directly from their pay. And sometimes the company also contributes to each employee's account. So with an individual 401k, business owners can make those contributions. They take back the power over their own retirement. They're able to manage things themselves. They're able to direct the funds. They're able to invest in whatever vehicles that will suit their own risk profile or financial situation or investment strategy. Now, let me give you a very important piece of information for business owners with employees. This is important to keep in mind. So, the only participants allowed in a solo 401k are the business owners and any spouses who work for the business. Okay, I've already clarified that. Now, businesses that have common law employees may still be able to offer a solo 401k to the owners if those employees do not meet the plan eligibility requirements as specified in the plan documents. So employees must be included in the plan if they have reached age 21 and have worked 2 years within the business where at least one 1,000 hours were worked in each year. So if any of your employees do become eligible for the solo 401k, you want to consult a tax advisor because you will need to allow them to contribute, those employees, to make contributions for them. You need to hire an administrator for annual compliance testing and or file an expanded version of Form 5500 Easy. If you have more info, you want to see IRS publication 4222 for more on multi-participants 401k plans. So you might also want to consider whether terminating your solo 401k and establishing another type of small business retirement plan. For example, you can have a simple IRA, and this could make sense for you. Again, we're not giving a tax advice here. You want to contact a tax advisor in this regard. And one thing I want to say here is that if you or the other owners or spouses in this plan own multiple businesses, you may have to cover all of your employees under this plan and should consider opening a different type of plan. Okay. And so you want to look for a small business retirement plan that fits you. If you're really not sure if a solo 401k plan is the right decision for you, you want to take a look at the other small business retirement plans that are available. So you have a SEP IRA. So this is a simple employee pension IRA. This is a plan funded by the business. It allows for tax deductible contributions that are flexible and grow tax deferred, making it a consideration for businesses with varying profits. This is for the SEP IRA. You also have the Simple IRA. So Simple stands for Savings Incentive Match Plan for Employees. And this kind of plan allows both the employer and the employee to contribute to employee retirement accounts with tax deductible employer contributions. And this is kind of cool because it allows employees to make pre-tax salary contributions and may be a consideration for businesses with steady profits. And you also have the profit sharing. Profit sharing plans are also excellent because they reward employees with a percentage of company profits, but they do not have to be profit based. So employer contributions are discretionary and tax deductible to the business. So those are the alternatives that you might want to think about. All right, folks, we are about to wrap up today's conversation. So before I just wrap this up, I just want to tell you that I want you to see right now on the screen we have a comparative, not a comparative, let's say a synopsis of today's conversation. So I want to give you a quick facts on solo 401k plans. So what are the eligibility rules? No age or income restrictions, but you must be a business owner with no employees. Contribution limits, it changes every year, but for 2020 2021 it is 57,000 and 58,000 respectively, with an additional 6,500 catch-up contributions if you are age 50 or older. Taxes on contributions. So traditional 401k contributions are made pre-tax, reducing taxable income for the year. So Roth 401k contributions are made with after-tax dollars. What about the taxes on qualified distributions in retirement? So for traditional 401k, the qualified distributions are taxed as income. For Roth 401k, they're tax-free because you already paid the taxes. And how to open a solo 401k plan? As long as you have an employer identification number, you can open a solo 401k plan in many online brokers. Any of the ones on the ones that we actually covered on other shows would be a great fit for your 401k. All right. One thing I want to say here is that today, the recap I spoke about, I defined the solo 401k. I gave you the key benefits of a solo 401k. I gave you, we spoke about the contribution limits and the distribution rules, and also how to set up a solo 401k. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.